Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at the coin flip theory. So I've got a couple different links for you here if you wanted to check those out. Those will also be underneath the video for you to click on. Just some basic mathematics behind the coin toss theory and the entire theory behind it, and then some very much more detailed videos as far as the math is concerned. But you can take a look at those. But basically, the coin flip theory is the idea that if you flip one coin, okay, you've got a 50-50 shot. You don't know really what it's going to be. Whereas an example, if you flip 100 times, you have a very strong prediction of what it's going to be. You know that, as an example, 50% of the time in terms of a coin is going to flip towards heads or tails. And that gives you a lot of really good information that you can work off of. One of the big examples that you see this from is it's too common that a new trader gives up on the strategy before they've even really had time to investigate the long-term possibilities. Now, how many times have you seen it where a new trader will get in, place a couple trades, whether they're wins or losses, most likely losses, they give up. Well, that's only 7 or 8 trades. You haven't really even scratched the surface in terms of the overall probabilities. If, say, the trade is 60 to 70% accurate and the risk reward is in line and you just happen to hit that streak of losses, you've now given up your opportunity to make that money back as well as continue to make profits. So it's really important that new traders use really small stops and limit their risk on every trade, because the most common mistake that new traders will make is just getting knocked out of the career before they can even really start. So going back to the coin flip theory, basically if we flip one time, we can't really predict the odds that we're going to get heads or tails. We don't have enough information. But if we flip that coin 100 times, we have a really strong idea of what's going to happen, what the outcome will be. And really that applies to trading as well. You have to give yourself the opportunity to take 100 trades, 200 trades, 1,000 trades. And you have to do that by cutting your losses early and never risking more than 5% of your account. Now remember guys, we teach all of this stuff to our students, okay? So make sure to join up or at least check out the trial, and we go over all of this stuff so you know how to manage your risk. So the best way that you can find to capitalize and make the money and put the odds in your favor. So that's kind of the basics behind the coin flip theory. If you have any questions about it, feel free to send an email to School of Trade. We'll be sure to get back to you as soon as we can. Have a good one.